Welcome to the GetRealWealth.com radio show, where wealth means a lot more than just building a second stream of income. Listen and learn how 70% of the millionaires in America used real estate to create a lifestyle that most people only dream about. A lifestyle that includes good health, family, romance, travel, charity, and all the other parts of a balanced life. Now, here is your host, real estate investor and mentor, Steve Davis.
Good afternoon and welcome to the GetRealWealth.com radio show. I am your host, Steve Davis, where, as always, we're talking about using real estate to build a second stream of income so that you have more time for family, romance, and all the parts of a balanced life. And I'm going to start today's show with some urgent email questions. And the reason I call them urgent is because they came in after the show yesterday, and they are questions that have many answers, too many for email. So I've already emailed these individuals and told them that they have permission to call me, and we'll discuss it, because it's going to take 10 minutes to answer it on the phone, because there'll be questions. I can answer it in quicker on the radio. But the question is this: how long should I be accepting offers on a wholesale assignment? Well, that's an odd question. And what do you mean accepting offers? I'm not sure. I guess what you're doing is getting the property under contract and then letting the investors bid on it. Well, then the answer to that is, how many days do you have the contract? I'm sure you don't have it more than 5 or 7 days. So I wouldn't do it for more than 2 days. That way the investor has 3 or 4 days to be able to analyze the deal and make sure it's a good deal and do their inspections. So if you're going to be a quality wholesaler, you're going to give your investors time to do their inspections. These guys that tell you, and I know who they are, and they say, oh no, put up hard earnest money and you don't get to inspect the property. No inspection period. Those guys are not good wholesalers. They are high pressure. They're probably big companies, and those are not the people to deal with. So, Lauren, your strategy is dependent on how many days of feasibility study that you have. I'm assuming the maximum you could probably get is 7 days. So you can't take bids for more than a couple of days if you're going to give the investor time. But I'll tell you, Lauren, I don't do that. When I wholesale a deal, I set a price and take the first person who takes it. I don't try to bump it up. I don't have investors work against each other. You say, well, I can make more money doing that. Good for you, but you're taking risks, and you may be beating up your investors. And the first time they do come across a wholesaler that doesn't do what you're doing, guess what you just lost? A customer. So what you should be doing, Lauren, is if you get it under contract, say for 110, and you want a $10,000 finder's fee, then call your investors and say it's 120. You make your 10 grand and move on down the line. Don't go, it's 120, your highest and best offer, and then run out of your feasibility study and lose the deal. Or put the investor in a position where they don't have time to do inspections. Then the deal goes sour. Guess what you just lost again? Another customer. So the answer to the question is, I wouldn't be accepting offers on a wholesale assignment. I would set my price. They either take it or leave it. Call through the rest of your investor list until somebody takes it, and get the deal done. Sure, you may make $1,000 or $2,000 less per deal, but you keep your customers happy, and they will keep coming back to you. One of the big misconceptions is people try to get rich off of every deal they do. They want to make the maximum amount of money off every deal they do, when volume is much, much, much better. Volume is much, much, much better. So there's the answer to that one. The next one is really 2 pages long, and I'm not going to use the name because There's something in here that is just indicative of someone having no idea what they're doing. And the reason I'm being so brutal on this one is because I want this person, and they'll know who they are, to know you don't buy property that doesn't cash flow. Why in the world would you buy property that doesn't cash flow? Here's his argument. Well, it's going to go up in value, and I'm paying off the mortgage. Guess what? If you have a house that has positive cash flow, it appreciates too. It has principal pay down and positive cash flow. You're taking, excuse me, a overpriced house and under renting it because you have to. You know, this is a $332,000 house, I believe. $362,000 house. That's not even a good house to rent because you're only getting $3,200 a month in rent. No, $2,200 a month in rent. We get $1,700 on a $200,000 house. See, the misconception that I talk about all the time is this, that a $400,000 house will rent for twice what a $200,000 house. They won't, and your expenses are double. So you make less money on the higher end homes. So this deal falls out of the rental category straight out of the blocks because of its price. It falls out of the rental category because it's negative cash flow. And it falls out of the rental category because you owe too much on it. Now you've got about $65,000, $70,000 in equity that you can get out of that house by selling it, and that is exactly what I would do. And I would take that money and go buy 3 or 4 houses that don't lose $300 a month but make $300 a month. You could take that $60,000, $70,000 and suddenly you've got 4 houses, and let's say $300. That's $1,200 a month additional income for the rest of your life, and that's only going to go up as rents go up and so on. You'll still get the appreciation. You'll still get the principal pay down. Is that right? Yeah, principal pay down, the cash flow, and you'll probably pick up equity capture. Meaning you're going to pay less for the house than it's worth, so you might pick up 10 or 15% there as well. So please sell this house, get rid of it. Don't ever hold on to anything that's negative cash flow. The game is positive cash flow. Focus on that, and you'll win every time. Okay. When we come back on social media today, I said we would talk about passive investing for the beginner and advanced. And the reason I said that is because it's the same for both. There really is no difference. If you're going to invest passively in an apartment complex, you're an advanced investor. That's all there is to it. And we'll talk about that when we come back from the break here on the GetRealWealth.com radio show. I'm your host, Steve Davis. Thanks for listening. Hi, this is Steve Davis, host of the GetRealWealth.com radio show. Catastrophes happen in the U.S. and around the world on a regular basis, causing tremendous financial difficulty for those unprepared. However, some people are prepared. These are the people with a second stream of income. This month, we are offering a free 2-hour workshop on how to use real estate to build a second stream of income for your family. For reservations, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. Right now, we're beginning the conversation on passive investing and what our members are doing, what they're going to do in the coming months and years. Is they're going to be buying apartment complexes, probably mostly single family. If you look at the numbers, in other words, 100 single families and maybe 10 apartment complexes. But these apartment complexes are really big, 200 units all the way up to one is, we're looking at a 750 unit, is they take a lot of people to pull off a deal like that. And those are the passive investors. The syndicator is the leader of the group. They're the person who locates the property, negotiates it, evaluates it, underwrites it, gets it financed, and they manage it. The passive investors do nothing but put up the money. And the example that I usually use is a small complex around 200 units, and we'll use one that I've actually done where we bought it for $4 million, put $1 million into rehab, so we owned it for about $5 million. And at the end of 2 years, after we rehabbed it, increased the rents, filled up all the vacant units, and got it cash flowing, and raised the net operating income. It was worth probably double that, close to $10 million. And we refinanced it and pulled out over 100% of what we had put in it. So let's look at, we probably had about 1.5 in it. And when we refinanced it, we pulled out over 1.5 million, giving us in under 2 years a 100% rate of return, which translates to about a 50% rate of return annually. And this is why people want to join Real Wealth Academy, is to have access to our well-trained, competent syndicators that know exactly what they're doing. Some of them even have rather lengthy track records. Some of them are new. But they've been trained. They know what to do. And so it makes it a much safer investment than, and I know I'm going to get beat up for this, I don't like REITs. You know, I've met some of these salesmen that come out and, you know, they're always coming to my office and going, yeah, we would like to promote our REITs at your office. I'm like, I have no interest. Once you see the list of fees that a real estate investment trust has, you can see why the people putting up the money have such low rates of return. And this is anybody's REIT, whether it's Grant Cardone's or one off the, stock exchange, whatever. These REITs have incredible upfront loads. They charge you for sneezing. So I do not care for those by comparison to joining a local real estate investor group, finding a local real estate investor who's buying local properties. Your rate of return will be much, much higher. The REITs are probably getting, or REITs, however you say it, they're probably getting 6-7%, just like a good stock. We're getting 50%. Why would you ever even consider a REIT? They're really, people say, I'm a real estate investor. I go, what do you own? Oh, I own some shares of a REIT. You're not a real estate investor. That's no better than a stock. That's like saying if you own GM, you build cars. You don't build cars. You own part of GM. That's it. It is this way. The passive investor from Real Wealth Academy or the other groups in town that do it is the best way to do it. You're going to get your highest rate of return. You're going to get well-trained, competent investors to work with and be able to invest in something that you probably never could on your own, unless, the deal I just described was 1.5 million out of pocket. Okay, if you got 1.5 million, then yeah, you could do that deal on your own. But if you got less than that, you're going to need to do passive investing through one of the groups here in town. So the question that just popped up is, how did you double the value of the property in just 2 years? This is actually pretty standard in a thing called a value play. See, there's two different types of apartments. There's a yield play, where you buy an apartment complex that's pretty good shape. It doesn't need a lot of rehab. It's probably 85+% occupied, maybe even 90+% occupied, and you're really buying it for the cash flow. You might make 10%, you might make 15%, you might make less than that. But it's, in some people's minds, it's a low-risk deal because, hey, I don't have to rehab it, I don't have to try to lease it up, it's already leased, it's already got high rents, it's in good shape. So that in their brain, they think, hey, that is a low-risk deal, and they're willing to take those lower rates of return. We'll call it 10%. It could be higher, it could be a little bit lower. And, the other reason they do it is because the cash flows from month one. The problem or challenge with the other style deal is it may go 18 months before it cash flows, maybe even 2 years. But who cares, because at the end of the 2 years, you get a 50% rate of return instead of 10. That's, 100% rate of return at the end of at the end of 2 years is 50% annually. So that's why, to me, the value play is actually the lower risk deal, because it's simple. I get my money back faster. If I do that and I get all my money back in 2 years, boom, I've still got, let's say I put up $100,000 into that deal. 15 people put up $100,000 each. I got my $100,000 back, but I still have $100,000 in the deal. I've turned $100,000 into $200,000, and then what I do is I take that $100,000 I just pulled out of the property and do what? Put it in another deal, just like the first one. And again, the reason I see the value play as the less risk, even though it's got high vacancy, low rents, and needs $1 million in rehab, it's because I know that raising the rents, filling this vacant units, and doing the rehab are pretty easy. It's easy. And at the end of 2 years, my property has gone up 50 or 100% in value, whereas at the end of 2 years on a yield play, the property's worth about the same. You're, of course, going to get normal appreciation, which is about 3% a year, but that's nothing compared to doubling the value. So, in my past experience, in my opinion, the value play, while it appears to be higher risk, is actually lower risk. And another thing, the banks are going to look at it as higher risk, and they're going to want a higher cap rate if they're going to do the deal with you. So keep that in mind, that what they think is higher risk, a professional investor probably sees it the opposite, that the value play is the lower risk deal. And by the way, the book to read on this, if you want to study these concepts, is by Steve Burgess. It's called How to Buy and Sell Apartment Buildings. I better look this up because I just butchered that name. Anyway, it's Steve Burgess, and it's just a great book. I mean, it changed our lives as investors the moment we read it, because it's so good at explaining exactly what buying and selling apartment buildings means. Yeah, there it is. The Complete Guide to Buying and Selling Apartment Buildings by Steve Burgess. And of course, it's at Amazon.com in Kindle and in paperback. Probably should do both, to make sure you truly understand it. The next thing about passive investing is I've seen people, and there was a case study at Quest IRA with one of our syndicators, Robert Martinez, where a guy started with $100,000, and 5 deals later or 6 deals later, he's over $1 million equity using the technique that I just described. Okay, how much? What's the minimum? I'm sorry, I just got an email. What's the minimum to invest? You really need $60,000 or more to get into one of these deals. $60,000 or more. And I also, the strategy that I used, I don't care for diversification, but the strategy that I used is diversifying in a specialty. The specialty is real estate. I had 100, 250 max in each of those 11 apartment complexes that I owned. And so I was diversified, but it was a special kind of diversification because my brain was not diversified. My brain was all real estate, but I had multiple apartment complexes with small amounts of money in each one. Okay, phone lines are open now, 281-558-KSEV. You're listening to AM 700, the voice of Texas. This is the GetRealWealth.com radio show. Thanks for listening. Real estate accounts for more millionaires in America than any other investment vehicle. This second stream of income can truly change your life. More time for travel and romance, more time for family and fitness, more time for whatever you want to do with your life. To find out how to build this second stream of income, attend our free 2-hour introductory workshop on real estate investing. To reserve a seat, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. If you've got a question for me, feel free to email me. It's asksteve@GetRealWealth.com, asksteve@GetRealWealth.com, or give me a call at 281-558-5738. That's 281-558-KSEV. So we've been talking about passive investing, and this is the highest and best use for your money as a rule. There are exceptions to that, such as an individual where they were 72, so it was a little different depending on age, but if you're, 60 or under, it's the highest and best use for your money. Your single family can generate cash flow quicker than a value play, but it's not going to give you that big 100% rate of return at the end of 2 years like an apartment will. So if you're interested in investing passively in apartments, join us or one of the other groups in town that does syndicate apartment complexes and gives you the opportunity to get into those things as soon as possible. And the reason I put the urgency behind it is because when we come out of this COVID, there's going to be opportunity, and a lot of it. So you want to be prepared by go ahead and getting yourself educated now. Learn what a good deal is. Learn how to analyze a deal, and get your money working. Because I'm sure for most of you, when you hear 50% rate of return, you're looking at your investments going, holy Toledo, I don't get anywhere near that. Then you should change that for yourself and your family. You really should. Don't sit on the sidelines accepting 2, 3, 4% rate of return when you can get massive rates of return in these value play apartment complexes, and you don't have to be a millionaire to do it. If you got 60,000 or more, you're qualified. Okay. All right. Phone lines are open, 281-558-5738, 281-558-5738. Okay. The next concept I want to go over is based off of an email. Oh, no, I'm sorry. This is Bigger Pockets. This was a really good question, and the answers that he got were all the same. It's just so funny. But it's simply this. He's getting ready to do a HELOC on a duplex. He lives in one side. He has renovated the inside of the duplex, his side. The other side needs to be renovated, but there's a tenant there. And he goes, how do I renovate it while the tenant's there? Here's the answer. You don't. And guess what? You don't need to get a HELOC. You know what they generally do? Drive by. That's about as much inspection as they're going to do for a HELOC. So there is no reason that you have to disturb that tenant or go improve their property when you don't know whether they're going to take care of it or not. And the reason I say that is because this is an inherited tenant. Now, with all that said, I want you to consider this. It might be better to, hold off and refinance the the duplex and get your money out that way. It's going to be a much lower interest rate, much lower payments, and it's actually just, it's a little more complex than the HELOC. But that's going to get you the money out. Make sure that it leaves you positive cash flow. Don't pull out so much money that all of a sudden you got a negative cash flow deal, because you remember what I said earlier, you don't do negative cash flow. So I think that's everything in this email. Let me read, this Bigger Pockets post. By the way, if you're not a member of Bigger Pockets, it's a really good forum for real estate investors. I like it because I love to answer questions, and when I get bored, I just go to my email, and they've emailed me 10 or 20 questions, and I answer 10 or so of them. It's fun. And plus, you can post questions and get answers from people like me. It's pretty cool. Biggerpockets.com. Biggerpockets.com. Okay, phone lines are open, 281-558-5738, 281-558-KSEV, or email me at asksteve@getrealwealth.com, asksteve@getrealwealth.com. Okay. I got a question here. What's the least amount of money I have to put as a deposit on a home? Okay. I'm not sure if you're talking about renting a home because you use the word deposit. I'm going to assume you meant down payment or total out of pocket. And I don't like talking about down payments because they don't include closing costs. And it gives you a false sense of how much it takes to get your first rent property. But the last 20 rent houses that I bought were all between $18,000 and I think $24,000. So about $20,000 average, because most of them were well below 24. But in the coming market, in the coming market, you're going to see those down payments drop. They may drop 50%, they may drop 75% if it gets as bad as it did, or as good as it did in 2008, 9, 10, and 11. So again, last 20 were about 20 out of pocket. But that's going to change. That's going to drop to 15, 10, or maybe even 5. If it gets real bad, like it did in 2008, 9, and 10, you'll even find some, not a lot, but some that are zero down. But those are rare, few and far between. So thanks for the question, Joe. Okay, phone lines are open, 281-558-5738, 281-558-KSEV. Let's see. I'm wondering, this is from Rick. He says, I'm wondering if in the future we can make one of our tenant selection criteria they work for an essential business. That's interesting. That would reduce the risk for landlords if there's another shutdown. Yeah, this is an interesting question. I'm having trouble answering it. I just think you would cut your tenant base down so much that you'd go vacant for months, which is the same as going through another COVID event. Trying to fill it with just essential workers. I don't know if you can legally do that either. I'd have to talk to an attorney. I don't see why you couldn't, but there might be some law that prevents you from doing it. So, Rick, I'm going to have to tell you, you need to speak to an attorney if you're going to do that with your rental properties. But I don't really think it's a good idea because, again, if you cut your renter base down by 50%, then it's going to take you way, way longer to lease it, could be months, and then that eliminates any savings you had if we do have another COVID event. Okay, phone lines are open, 281-558-KSEV, 281-558-5738. Let's go to, okay, Joe has emailed back. What I meant was, if I look at a house that I want to wholesale, how much do I need to give that person who has that property in order to hold it? Oh, that's a good question. This is a great question. The answer is complex, Joe. One, I've built massive rapport with the owner of the property. And what I generally do is I offer them $5,000 in 5 days. I say, look, go ahead and sign over the property to me. I'll bring you $5,000 in 5 days, or I will release the property back to you. Now, some people are going to say, ooh, the seller's taking a big risk. Really? What risk? They can take a backup contract 2 minutes later. If he doesn't show up, or I don't show up with the $5,000 in 5 days, the seller is taking zero risk by doing that. Zero. So that's how I got around it when I was broke and had no money. Once I had money, I would put up $1,000 or $2,000 and promise another $3,000 or $4,000 in 5 days that I would get from my buyer. And I hope that makes sense. So I hope that helps, Joe. Thank you so much for the emails. Okay, let's go over to the phone lines now and go up to the Woodlands. The phone lines are open, 281-558-KSEV, and speak to Mario. Mario, thanks a lot for calling in. How are you today?
I'm fine, thank you. I have a question. I heard you just telling somebody that was calling about a HELOC, and it involved a rental property, and I thought the HELOC was only for the primary residence. I didn't know you could use a rental property for a HELOC.
Yeah, that guy was living in one side.
Oh, I see.
Yeah.
So if you have rental property, you can't use...
4 units or below count as single family.
Oh, okay.
So if
you have separate single family unit and they're rentals, you can't use them for a HELOC, right?
I don't believe so. I think you're right, Mario.
Okay, well, that was the question I had.
Okay, thanks a lot for calling.
All right.
You take care. Bye-bye.
You too.
Okay, we got to go to break. Linda, I've got a email from you, and we'll get to that the moment we come back from the break here on the GetRealWealth.com radio show. You can call me at 281-558-5738, 281-558-KSEV, or email me. It's asksteve@GetRealWealth.com. asksteve@GetRealWealth.com. Thanks for listening. Are you tired of losing money in every down market? Did you know that real estate makes money in both the up and down markets? In fact, we make more money in the down market. Hi, this is Steve Davis, host of the GetRealWealth.com radio show. Yes, we are praying for a down market, and you should know why. To find out why, attend our free 2-hour introductory workshop. To reserve a seat, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. We are in the final segment of today's show, so if you've got a question for me, please pick up that phone and call now so we have time to answer it before the show ends. It's 281-558-KSEV, 281-558-5738. And this is it's 4 or 5 questions, and they're all answered the same way, just about. Basically what we've got, it appears that they have a tenant breaking their 1-year lease, and they want to know what they can do about it. she's aware that you can keep the deposit, but can you expect to collect the rent for the months up until the lease would have expired? Well, you're going to have to talk to the judge's office that would handle the eviction for that particular property. In most cases, the answer is no. It's your job to get them out of there and get it released as quickly as possible. I know that's really bogus because they signed a contract. They're supposed to pay the balance of the lease. I just haven't seen an attorney do that. I'm sorry, a judge do that. They go, did they move out? When did they move out? August 30th. Then they owe you August rent. And that's about it. How do you go about collecting for those months? As I said, you probably can't. And do you have to hire an attorney? If you were going to go try to collect it, yes, you would hire an attorney. But I don't think that an attorney would take the case because I don't think it's going to happen. My focus, Linda, when somebody calls me and tells me that they're breaking the lease, if they just disappear, I just release it as quickly as possible. But if they call me and say, look, I've got to get out, I got a job transfer, I got divorced, I got whatever, I let them out because it's, as I said, it's not worth it. And I'll even do my best to buy them out in the middle of the month. By buy them out, I mean, look, if you'll move out by the 15th, I'll give you your entire security deposit back if the property's in the same shape as it was when I gave it to you. And you can have your security deposit for your next lot, but get out by the 15th. Can you do that? And it doesn't work every time, but it's worked almost every time for me. And you get them out, and then you've got 2 weeks to do a quick make ready and get somebody else in there so you don't lose more than a month's rent. Yeah, the focus should be, Linda, not on trying to get the money from the previous tenant. Focus on getting the new tenant in there, and I think you'll be much happier. Now, if you want to, as I said, check with your judge for that area. He may be very conservative, and maybe he does allow you to sue for the balance of the lease, but my past experience has been no. Okay, phone lines are open, 281-558-5738, 281-558-KSEV, or email me at asksteve@getrealwealth.com, asksteve@getrealwealth.com. Okay, next question. Oh, this is cool. Now, some of you don't know about this. It's called Cozy, cozy.com. The neat thing about cozy.com is it lets you report your tenants to the credit bureau. You would be amazed how big an incentive this is for tenants to pay their rent on time. Because they, one, want to build their credit, and two, they're afraid of not paying because they know you're going to report them and then their credit's going to go bad. It's just a winner deal. Well, I learned about a new one yesterday off of Bigger Pockets. It's called the Landlord Credit Bureau. And I think it's Landlord Credit Bureau. There it is. Yeah, easy to remember. LandlordCreditBureau.com. LandlordCreditBureau.com, where you can, and it's got a lot of tools in there. It's only about $20 a month, and it allows you to report your tenants to the credit agencies. Again, giving them a lot of motivation to pay on time, to be good tenants, because if they're not, they're going to get reported and they won't be able to lease their next space, their next rental house. It's a very powerful motivator. So cozy.com or landlordcreditbureau.com. That's a couple of them. Okay. This is a situation where a business wants to lease a property, a single-family house. I'm reading just a second. Make sure there's nothing special about this. Yeah, this is just 4 guys in a 4-bedroom house. Bottom line is you can do it, but make sure you put the lease in all of their names, and you run a credit and criminal report on each one of them. Every one of them has to sign the lease, the business owner and the 4 people leasing. Now, they're saying they'll sign a lease for 1 year and pay the full year up front. I'll be honest with you, that's probably the only way that I would do it. 4 grown men in one house, they're going to be rough on that house. So the only way that I would do it is exactly the way you're doing it. Get the year paid in full, but you're asking who should sign it. I'd make all 5 of them sign it, the 4 tenants and the business. Make them all joint and severally liable, meaning they're all responsible 100% for the rent. And check the credit and criminal reports on those 4 individuals that are actually going to be occupying the space, because you might get a criminal in there, and you know you don't want that. So that's what I would do with that particular situation. I'm worried that the business is not going to want to do that. They're just going to want it in their name. If they refuse and they want it just in their name so they can swap tenants out, I guess I would do it if they paid the year in full, but it would be with the understanding that anybody that moves in has to have a credit and criminal report and pass. And if you move one out and try to put somebody else in, that one has to have a credit and criminal report, and so on and so on. But your best bet is to have all 5 of them on the lease. Okay, phone lines are open just a couple more minutes. It's 281-558-5738, 281-558-KSEV, or email me. It's asksteve@getrealwealth.com, asksteve@getrealwealth.com. Someone corrected me, and I really appreciate it. I think it's cozy.co, not com. Sorry about that. Cozy.co. Cozy, C-O-Z-Y, Z as in zebra, cozy.co. It's got some really neat features. Really neat. Yeah, it's pretty cool. I've looked at it a couple of times, but I do not subscribe to it or use it. I just know that I've talked to a ton of people on Bigger Pockets and around town that do use it, and I can tell you I haven't heard one negative thing so far. And I've known about it for a month or 2, so I would have heard something by now. Okay, phone lines are open, 281-558-5738, 281-558-KSEV. Let me see, I think I've got, this email. Oh, this is for a new friend of the show, I think. I would like to... Oh, no, this is not an email question. This is just a statement. Okay. Next question is coronavirus aftermath. This is from Mike. He's worried about jobs continuing to operate remotely and renters then move away from the city due to no longer needing to commute, causing a bigger supply of rentals in areas near cities. Also, will colleges offer full remote option, causing an increase in the off-campus? Decrease in the off-campus housing, sorry. Well, I don't think any of this is going to come true. Nothing, as far as a manager, is going to replace one-on-one when it comes to managing people. People that work from home, I just don't see that ever occurring. I see people trying it for a while, but keeping people motivated, keeping people trained that work from home, that's got to be much, much more difficult than having them in the office. I think they're more productive in the office as a rule. Yeah, I don't see that happening. I could be wrong, but I don't see that happening. When it comes to colleges going to just online, that ain't happening, because they make massive amounts of extra money because students live on site. So they're going to keep those classes alive on site. They're not going to let billions of dollars of assets just sit there. Okay, thank you so much for listening, and have a great rest of your day. We'll talk again tomorrow.
This has been the GetRealWealth.com radio show. Please remember that this show is for entertainment purposes only and should not be construed as legal, tax, or investing advice. Always get a professional opinion before making any investment decision. To find out about the mentoring and consulting at Real Wealth Academy, visit GetRealWealth.com and attend one of our free introductory workshops on real estate investing. That's GetRealWealth.com. Thanks for listening and have a great rest of your day.